షేర్ చేస్తాను. So good afternoon, guys. So when it comes to paper number 20 EO batch, so it's one of the important and easiest paper we have. With help of this, you can easily crack your both group results as well as rank. Trust me, if you get a 70 plus or 80 plus marks in SPM and BV, it will help to your aggregate as well as rank possibilities. Trust me, if you follow my notes and my books, concept book, practical book, and there is a newly introduced massive book called case study based questions book. So hardly you will get 60 to 70 marks easily only from that material. Why I'm saying that much of strong means, the only thing research I done for the material preparation, I consider all ICMA sources, including old syllabus, new syllabus. Trivikram? Okay. So when it comes to the research for my material, I consider old syllabus ICMA mat workbook, material and question papers and MQPs. So even so many people don't know about the journal issued by ICMA. Every month they will issue one journal. On that journal they will give all chapter related important questions as well as case studies or theoretical questions. I consider that issues also. Guys, okay? So you need not to worry about the book point of view. You can 100% rely on my book. That is sufficient. Okay. When it come to group 4 paper number 20A, before that it is an elective paper. Even 5 attempts are completed, few students are worried about the word of elective paper. The meaning of elective paper is not a open book exam. It is a selection of three subjects. Out of 3, you can select what is your required. When it comes to paper 20, it is classified into paper 20A, 20B and 20C. So 20A talks about strategic performance management and business valuation, and BC talks about entrepreneurship, risk management kind of papers. But I will suggest please choose paper 20A. Why? Because we know the past trends as well as this subject is interlinked to your strategic financial management, your strategic cost management, your financial reporting, CFR. That's why the best pick is paper 20A, strategic performance management and business valuation. Okay, done. When it comes to paper 20A, it is segregated into 2 parts. 50% for strategic performance management and 50% for business valuation. Now, when it comes to strategic performance management, all students thinking that it is a theory part. It is not a theory part. It is a theory plus problematic. So if you just focus on the problematic, that is sufficient, my point of view. But if you want a good score, you need to consider theory content also. Hardly 8 to 9 topics is there. Importance point of view. I am not saying they will came. Away vastayani cheppatledu. There is an important concept or star rated. If you focus on the theory content, that is sufficient. Remaining, you need to put efforts for problematic portion only. When it comes to BV, it's 100% problematic portion only. Let us check. When it comes to SPM point of view, we have 4 chapters. Chapter number 1, Introduction to Performance Management. Chapter number 2, Performance Evaluation and Improvement Tools. Chapter number 3, Economic Efficiency. And chapter number 4, Enterprise Risk Management. Okay. When it comes to marks point of view, in chapter 1, you can expect 7-mark theory question. 7-mark theory question. But last 2 attempts, they are providing problematic also. You already know that problematic. Without Spmbv, you can easily score 30 marks in last attempt. Only with the help of your financial management knowledge. The concept of ratio analysis, the concept of capital budgeting, with the help of that, you can easily crack 30 marks. If you add some more extent in the final stage, another 30 marks will be added. Guys, clear? Now, in performance evaluation and improvement tools, so there is a chance for, not chance, mandatorily, one theory question 7 marks, one problematic question 7 marks, 10 marks case study based MCQ. These are the marks you will get if you learn chapter number 2. Theory 7 marks, problematic 7 marks, 10 marks for MCQs. So when it comes to Spmbv and cost audit, so MCQs are two case, question number 1A, 1B. 1A talks about 10 MCQs, 2 marks each. 1B talks about case study based. They will give 2 pages of paragraph. They will ask 5 questions for 2 marks each, 10 marks. That kind of questions they are asking in SPM 1B. For that 1B, out 3 attempts they are asked 1B. 3 attempts they are taken the concept of chapter name called Performance Evaluation and Improvement Tools. When it comes to Enterprise Risk Management, chapter number 4, here you will get 1 theory question for 7 marks, 1 problematic. Okay? I already explained in chapter 1 you will get only 1 7 mark, that too theory. But last attempt they are asked 1 problem from ratio analysis. Ratio analysis. Where we learned the ratio analysis? Intermediate, financial management. If you know the ratio analysis, you can easily answer the 7 mark question. Next, when it comes to chapter number 4, completed. Chapter number 3, you will get only 7 mark question. That too problem. You can observe. Chapter 1, give importance for only theory. Chapter 3, 1 problem. Chapter 2, 1 problem. Chapter 4, 1 problem. In SPM also, how many problems you will get, sir? 3 problems. 3 problems. Guys, clear? That's why SPM is not a 100% theory. It is a practical plus theory. When it comes to next, business valuation. Here we have 5 chapters. Chapter number 1, fundamentals of business valuation. Chapter number 2, methods and approaches in valuation. Chapter number 8, mergers and chapter number 7, valuation of assets and liabilities. Chapter number 8, mergers and acquisition. Chapter number 9, law and compliances. Out of this is the theory chapter. So newly included in new syllabus. In old syllabus there is this concept, not there. But when it comes to the new syllabus, they newly inserted. Even 5 attempts, even they not ask single MCQ. As per board weight, 5%, but they are not considering that. Law and compliances. But we will refer that also. Okay? Now, when it comes to fundamentals of business valuation. So generally, if you follow board book, the order of valuation chapter is not like this. As per board book, the order is chapter 5, fundamental valuation, chapter 6, law and compliances. Next, chapter 7, methods and approaches, chapter 8, valuation of assets and liability, chapter 9, mergers and acquisition. For the purpose of easy sake, I just rearranged the order. First adjustment. The second adjustment regarding to valuation, in chapter 5, 6 are mix of fundamental things. It's a mix of fundamental things like cost of capital, capital structure, leverages, and NPV, IRR, that kind of concepts is there. If you observe both the chapter, in both the chapters they are presented. Because of removing the duplication, I inserted all foundation things in the first chapter called fundamentals of business valuation. Apart from the 5th chapter, you can learn final related concepts in chapter 6, 7, 8, 9. So this is about chapter intro and valuation and SPM intro. Okay. Now I will give a clarity about the question paper. Question number 1A, 10 MCQs, 2 marks each, 20 marks. Question number 1B, It's a case study based question. 5 MCQs, 2 marks each, 10 marks. This is the segregation of the question number 1. Now, this 20 marks come from all chapters, individual MCQ. But these 5 MCQs, they create a case study based on any of the concept in SPL. Maybe this attempt, I can guess, they will give one problem. They will point out it into 5 points, case A, case B, case C. You need to solve the entire problem. You have to answer for question number 1, 2, 3, 4, 5. As of now, they're not created like that. Maybe this attempt, we can guess like that. Problems, because we have that kind of case study based problems. In mergers and acquisition, it's a huge problems is there. So they will insert huge problem for 10 marks. Guys, okay? Next. When it comes to question number 2A, guys, theory question, 7 marks. You can fix the slot, chapter 1. Chapter 1. So this analysis is done with the help of past trends. Next. Question number, open chapter number 5. Question number 2B. It also be a theory question. It carries 7 marks. It came straight from 2nd chapter. Okay. Next. Question number 3A. Problem for 7 marks. It straightly came from chapter 3 called economic efficiency. Next, when it comes to question number 3B, it will be, we can't express. Sometimes they will ask a problem, sometimes they will ask a theory. But you can fix problem 7 marks from chapter 2. Chapter 2. Next, when come to question number 4A, problem, it carries 7 marks. It's straight from chapter 4 called risk management, enterprise risk management. 4B, it's a theory question, 7 marks. It come from chapter number 4. Okay. So sometimes this will be changed here. Okay. Next, when it come to question number 5A, guys, 7 marks from chapter number 5. 5B, 7 marks from chapter number 6. 6A, 7 marks from chapter number 6 or 7. 6B, 7 marks from chapter number 6 or 7. Question number 7A, 7 marks from chapter 8, mergers and acquisition. 7B, 7 marks from chapter number 8, mergers and acquisitions. 8A, 7 marks from chapter number 8, mergers and acquisition. 8B, 7 marks from chapter number 7. So this is the areas they're checking the solutions from you. So if you understand this concept first, then you can easily answer. This is a question paper analysis. Chapter list completed, question paper analysis is completed. Now without late, I start with the BV, business valuation. So when it comes to the chapter number 5, fundamentals of business valuation. Chapter number 5, fundamentals of business valuation. Opened. In up there is in up the, in bottom they provided not page number, it's a paper number. What's the paper number? 158. Top of the left corner. Okay. Now, when it comes to the fundamentals of business valuation, here you have to understand the basic stuff regarding to the valuation. Okay. Nothing theory is important, only calculation is important in the entire PV. Just listen and understand, tell me the answers, just that is enough. When it comes to valuation is required for what? Valuation is required for what? What, sir? Assets. So valuation is required for assets. Okay. Before requirement, I will ask a question. What is meant by valuation? Consideration or a determination? So determination is the best word compared to consideration. Determination of something in numerical or monetary terms is known as valuation as per dictionary meaning. Valuation means find outing or ascertaining or determining something in monetary for particular thing is known as valuation. Now the question is, you said where value means asset na. Here is a word thing is there. The thing are classified into asset, business, liability. So we are doing a valuation for three things. One is business, another one is asset, another one is liability. When it comes to asset, we have a different types of assets. So first they are classified into tangible assets, intangible assets. When it comes to tangible assets, there is a big list is there, plant and machinery, PPE, land and building, etc., etc. When it comes to intangible things point of view, goodwill is there, and next copyrights, patents. Guys, clear? Human resources, HR. These are the things you have to do valuation as a valuer with the help of this business valuation subject. Okay. Next, I want some clarity regarding, are you agree for this? Price and value both are same? Price and value both are same? Different? What's the difference? Price is fixed by somebody. No, for my product, I will fix the price with the help of cost sheet. No, I will fix my commodity price with the help of my cost sheet itself. Why? Because we have a multiple pricing decisions. Out of that, one of the decision called cost plus profit. That is called cost sheet. With the help of cost sheet, I can fix. Next. You said they are different. I am asking, what is the reason? Asset valuation is either increase or values or worth. Okay. Okay. Simple man, common sense. What we pay called price, sir. What we get called value, sir. What I pay is called price. What return I get called value. Sometimes either it's a more than price, sometimes it is a equivalent to price, sometimes it is a less than price. That's why they both are different. Okay. Now, when it comes to price is fixed based on demand and supply. Price is fixed based on demand and supply for my company or my product. In my company, for my product, I will fix the price based on demand and supply. But value is based on conditions of the market, economic situations. Guys, okay? Internal factors, external factors, consideration of all those things, I will calculate the value. Okay? Next, in simple terms, price purely based on value in exchange. Value in exchange. When it comes to value, it's not based on the value in exchange, it's based on value in use. Hope you guys understand. Huh? Simple. For example, mic is required here. Mic is required here. The price of the mic is 10,000 rupees, for example. Because of emergency situation, if I ask the owner of the mic, he said 12,000. Are you pay or not? Based on situation, value increases to 2000. But what is the actual price? 10,000. That is the difference between value and price. Next, another clarity you need to get. Valuation, for example, I am doing a valuation for mic. My point of view, it's a 12,000. Your point of view, same 12,000, huh? Your point of view, same 12,000, huh? Why? Because of the situation, not demand. Because of the situation, demand created. That's why value are vary. For example, you are the valuation of your company. I am ready to sold my company to you. As per my knowledge, I am valued my company for 100 CR. Are you agree for that 100 CR directly? Are you negotiated na? How you negotiate here? How you negotiate? ఎలా negotiate చేస్తావు? నా కంపెనీ వాల్యూ నువ్వు చేసుకొని నీకంటూ ఒక వాల్యూ ఫిగర్ అవుట్ చేసుకుంటావుగా, దానికంటే తక్కువ ఎక్కువ కదా మాట్లాడతావు. గైస్ క్లియర్? అంటే నీ నాలెడ్జ్ వేరు, నా నాలెడ్జ్ వేరు. యువర్ స్కిల్ ఈజ్ డిఫరెంట్, మై స్కిల్ ఈజ్ డిఫరెంట్. Your professional qualification is different, my professional qualification is different. So valuation is a subjective concept. Valuation is a subjective concept. The word subjective means it will change from valuer to valuer, because different people have a different experience and skill and knowledge. Okay? My company CFO calculated, he said 100 CR. Your company CFO calculated, he said 90 CR. Okay? Then we will, one day we will fix the meeting, we will negotiate each other. I will said, ఒక్క రూపాయి కూడా తగ్గించుకొని 100 కోట్ల కంటే, నువ్వు అది 90 కోట్ల కంటే ఎక్కువ పెట్టలే. We will negotiate each other. Then finally we will decide for 95 CR. Now what is the true value? 95 CR. So valuation purely depends upon the negotiation. This is our subject says. Are you clear? It's a subject knowledge. When it comes to the reality, this kind of discussions is not there. I will offer directly. I will pay 2 times of your sales. If you are agree, sold your business. If you not agree, then okay, fine. Or I will use 7 times of your EBITDA. Earning before interest, tax and depreciation profit is there na. If you have a 10 lakhs, I will pay 10 lakhs into 7 times. That's the way in reality they will decide the value. If you need a valuation practical knowledge, you need to watch Shark Tank. That entire Shark Tank talks about this one only, valuation. Guys, okay? But Shark Tank explaining in a practical manner. When it comes to our valuation, explaining in a bookish, with the help of subjectual and conceptual knowledge. Okay. So that is a basic required knowledge for valuation. Let us check here. Valuation is the analytical process of determining the current, that is nothing but fair value of an asset, company or security using models based on income, market, asset. We have a different methods. The methods are classified based on approaches. We will discuss later. Okay? With help, if you want to valuation, if you need to do a valuation, you need to use a tool now. I need to use a formula to calculate that. That formula is nothing but method here. We have a different methods. That is a chapter number 6, valuation methods and approaches. Next. Focusing point on valuation. The first point is valuation is a subjective concept. Are you agree for this? Now, why it is a subjective concept means because of skill is differ from person to person, knowledge is differ from person to person, and experience is differ from person to person, and professional qualification also differ from person to person. That's why value is not same for 2 persons' point of view. Next, in a valuation, price is differ from value. I said clearly. Why? Because price depends on the exchange, demand and supply. Value depends upon the usage. Take another example to understand this price and value difference. You all know in recent times after RCB wins the IPL trophy, there is a big news is Malia Mansion, Vijay Malia Mansion in Kingfisher Towers. Guys, clear? So the valuation as per Vijay Mallya is 160 CR. I think it's the top of the 14th floor or 16th floor mansion. But when it come to government sold that property to one big giant company for 120 CR. Not 120, less than 100 CR I think. Guys clear? Now, as per Mallya 160 CR, as per government, why? Because of value in use. Value in use. Take another example. I have one building. I am ready to sold to public. Any people can purchase this. One person came, he asked what is the bid price. I will decide the bid price now. I said it is a 10 CR. He said no, it's a value only for 8 CR. Another bidder came, he said what is our bid price? I said 10 CR. He asked any competition is there? Automatically I will say there is a huge competition. I said there is a huge competition. Then he said finally it's a 16 CR. There is no more discussion, I will pay. Guys, okay? If you observe the detailing of the example, first bidder is there, 8 CR. He was ready to use that property for self. There is no income generation from that. That's why he said less than the bid price. When it comes to second bidder is there, he said 16 CR. Even the bid price is 10 CR. Why he offered extra 6 CR means he was start a hotel business on that building. Now he will get a future economic benefit. Guys, okay? Next. So this price can be fixed based on demand and supply. This value can be fixed based on benefit we receive. Benefit we receive. Next. So how we fix the price means with the help of the concept name called price mechanism. If demand is more than supply, automatically seller will increase the price. If supply is more than demand, automatically he will decrease the price. That is the way price fixing. When it comes to value fixation, this is the concept. Economic value added point of view, market value added point of view. These are the concepts we will discuss later. Next. Valuation is done at point of time. Valuation done at point of time. My question, are you doing everyday valuation? Are you doing every week valuation? Are you doing every month valuation? Are you doing every year valuation? Every year valuation. Every year valuation. Depends. If you want to show your values, asset values to government for income tax return purpose, you have to value. If there is no situation of that, you can't value. Guys, clear? So then regular ga chesukom manam avasaranik maatrame cheskuntam. That's the point called valuation done at point of time. When it is required, then only I will do valuation. Okay? Now you can observe flow concept, stock concept. The word flow concept represent if you do a task in regular intervals again and again, that is called flow concept. If you do a task at one time, that is called stock concept. Now tell me, valuation is a flow concept or stock concept? Are you doing regularly or one particular point of time? That's why stock concept. MCQ. It is MCQ. Guys, okay? Next. So these are the examples to understand valuation. So Ola startup valuation. So their valuation is $7 billion US dollars. $7 billion US dollars. Okay. Go with a practical example. I am ready to sold this Shikhara. Are you ready to buy? Are you ready to buy? Okay. My point of view, I calculated one value with the help of different methods. I can't express to you. Now, if you are ready, how much you will pay? Roughly tell me. So anyway, take with the 10 CR. Okay? How you decide that 10 CR? What assets is there, man? Benches, chairs? What, sir? Based on goodwill. Based on goodwill. What you say? Exactly. Another thing. based on the future economic benefit. Are you check only present admissions or future admissions? Both, current as well as future. So here is a good method to calculate valuation of Shikhara is either you can consider the goodwill or either you can consider the future economic benefits. You can't use assets. It's not shows appropriate valuation. Guys, clear? Based on the nature of the business, you have to decide the method which one is suitable. For example, Shikhara is a steel manufacturer. Steel manufacturer. Now which one is a, can I take a goodwill? No. Every manufacturing company don't have that much of goodwill. Goodwill is a concept majorly focusing for service sector companies. I can use goodwill, but it's not appropriate for steel manufacturing. Can I use future economic benefit? Yes. I can figure out the demand for this. I know the actuals of this year. I can estimate the future economic benefit. Guys, okay? The conversion of future economic benefit is there, na? That is called discounted cash flow method. Goodwill point of view said, na? That is called valuation of goodwill. Guys, okay? You said assets point of view, na? Valuation of net assets. Valuation of net assets. Now tell me, Ola, software company, it's not a software, it's an electric vehicle selling company. They are done a valuation with the help of discounted cash flow method. You said already. Steel also you can consider the future economic benefit. What method they used in reality? Discounted cash flow method. They forecasted how much cash I will receive in future. I will bring to present value. That is my value. Next, when it comes to Zomato, for the purpose of IPO, they valued their company. At the time of valuation, the value is $13 billion US. So they used a concept name called market multiples. Market multiples. Just understand the word multiples. That is enough. I will give a clarity at the time of explanation. Next, when it comes to who acquires whom? Facebook. The name of Facebook now Meta, I think. Meta acquires Instagram for $1 billion US. The method they used for valuation is discounted cash flow method. So there also they calculated future economic benefit. You can observe they are not used the concept of goodwill. At the time, Instagram don't have that much of goodwill. At the time, it is a just growing company. Hope you guys understand. Now, when it comes to HDFC, because of the partner issues, for distributing the partners, they calculated value of the HDFC with the help of market multiples. Market multiples. This good to betcom multiples cheppin tarvata neeke clarity vastadi. Next. Okay, done. I hope you understand. If you want to do a valuation, you need a purpose. Without purpose, you are not ready to value your organization. Now tell me what are the purposes we have to do a valuation. Sale, exactly. Super. If you said sale means purchase, another person point of view purchase, na? Can I use word called sale or purchase? The professional word we have to use merger or acquisition. Instead of purchase or sale, we have to use a word called merger or acquisition. Next, amalgamation. So generally merger and acquisition is a part of the amalgamation. Okay, done. Cool. Next. What, sir? Purpose. I want purpose. What, sir? Winding. Loan. Yeah. If you want to apply loans for the banks or security purpose, I need to do value of my company. Okay, excel. Super. Next. You said what, ma? Winding up. Instead of winding up, can I use the word liquidation? Yes. At the time of liquidation also, I need to value my company. Next. Few example already is there. IPO. If IPO, it is an IPO situation, you have to decide per share price. How you decide means first you need to figure out the value of total. Divided by how many shares you are ready to issue. If you divide it with that, you will get value per share. That is the IPO price. That is the purpose also you have to do valuation. Next, partners issue. We need to settle. Are you clear, sir? These are the basic purposes we have. Let us check what the purposes given in the question paper, material. Merger and acquisition situation, liquidation and insolvency point of view, trade disputes, IPO, business reconstruction. What is meant for business reconstruction? We are rearranging our assets and liabilities for benefit purpose. Internal reconstruction. At the time also, if you want to revalue, first you need to find out the value. Next, buyback of shares. We need to decide now how much I need to buy back. That's a valuation. When it comes to estate planning, do you know the estate planning? No. So forefathers, they will give properties to their grandchilds. Guys, clear? That kind of disputes arises between the HUF. At the time also you need to do a valuation. That is called estate planning. So these are the basic and the major purposes we are doing a valuation. Any doubts on this? Up to now clear? Okay. Now, valuation approaches. Valuation approaches. We have three approaches. One is market approach. Another one income approach. Another one cost approach. Based on approach, they are classified into methods. Based on approach, they are classified into methods. Under market approach, we have three methods. One is market price method. Another one is market company comparable multiples method. Another one, market company comparable transaction method. Don't ask about the discussion. Just understand the name. We will discuss in chapter 6. As per market approach, how many methods we have? 3. Market price method, you can use a company comparable multiples. Company comparable multiples, CCM. Next, company comparable transaction, CCT. Okay? When it comes to income approach, here it classified into two methods. One is discounted cash flow method. Another one is earning capitalization method. When it comes to the cost approach, it classified into two types: cost replacement method, cost reproduction method. Okay? First, you need to understand one thing. There is no direct methods. Methods are taken from approaches. It means when you decide, if you decide you need to do a valuation, first select the approach. After selection of the approach, then consider which method is suitable. Yeah. Subject knowledge required for valuation. If you want to do a valuation, it is not that much of easy task. ఇప్పుడు మనం మాట్లాడుకుంటున్నాం 10 crores 100 crores అని నోట్తో చెప్పినంత ఈజీ కాదు. You need to understand business environment first for the purpose of knowing the nature, service sector or manufacturing sector. Okay, if it is a manufacturing sector, which industry it is? If it is I know the industry, how much percentage market share it has. Guys, clear? That considerations you need to take first for valuation. For the purpose, you need to understand business environment. So if you know the strategic performance management knowledge, that is called business environment. After I consider the nature, I decided which kind of company it is, then you have to understand financial framework. NPO or profit organization, though both financial statements same or different. NPO and profit making company financial statement both are same or different? Different. Guys, clear? So that's why you have to understand accounts, financial reporting. Next, if you're doing a valuation, there is some litigations. For the purpose of solving the litigations, you have to understand law and compliances. For the purpose, you need to learn the subject name called law, as well as tax compliances. In every business, there is a profit. You need to pay tax, as well as capital gain, capital loss. For the purpose, you need to understand tax laws. Next, present and future calculation. Why? Because sometime we are considering future values, but I am taking a decision today. Today value is not same as future value set by time value of money in financial management. That's you need to learn financial management also. Next, when it comes to calculation and spreadsheets, that is nothing but max. If you know this all subject knowledge, then you can do the valuation. Guys, okay? In new syllabus, I said in the intro, Spmbv is easy. For whom it is easy means, if you listen at least one time regular class, or 50% of the regular class, కొన్నిసార్లు ఆబ్సెంట్ అయ్యి ఎట్లా వస్తుంటాయి కదా, అట్లా ఉన్న వాళ్ళకి ఈజీ ఉంటుంది. నువ్వు స్ట్రైట్ అవే ఈవో ఆర్ స్ట్రైట్ అవే మ్యారథాన్ చూసి వెళ్ళిపోతాను ఫినిష్ చేస్తాను అనుకుంటే మాత్రం ఇట్ నాట్ వర్క్స్. గైస్ క్లియర్? సో ఇఫ్ యూ హ్యావ్ ఎ స్ట్రాంగ్ నాలెడ్జ్ ఇన్ ఎఫ్ఎం, ఐ విల్ అగ్రీ, ఈవో ఈజ్ సఫిషియంట్. Guys, okay? So if you don't have a financial management knowledge, if you not take any regular coaching, don't follow EVO classes, don't follow marathons. Guys, clear? Why? Because the graph of the Spmbv marks are reducing. Once upon a time, at the time of my exam, my score is 87. My friend's score also similar to like that, more than 70s. So when it comes to new syllabus, what happened means, you know already, not only Spmbv, all question paper standards are changed. We can't guess. We can estimate, we can't guess. That's clear. Same thing is reflected in Spmbv also. But the notion in the market is, Spmbv is an easy paper. If you watch marathon, that is sufficient. That kind of notions are created by a few people. So see, one student expresses his opinion. His senior said that Spmbv is nothing, man, you can easily crack. But he got a 43 marks. చెప్పిన స్టూడెంట్ ఇన్న స్టూడెంట్ కాదు, చెప్పినోడికి ఆడు చెప్తున్నాడు Spmbv ఈజీ అని. ఆడికి ఒక 80-90 వచ్చి ఉంటే ఆడు చెప్పాలి Spmbvలో ఏం లేదు, నువ్వు జస్ట్ మ్యారథాన్ ఆడికి వచ్చింది 43 అంట మ్యారథాన్ చూసి. ఆ మ్యారథాన్ చూసి 43 కాకపోతే 400 వస్తాయా? గైస్ క్లియరా? ఓకే, డన్. Now when it's come to this valuation premise, guys, put a star. It's also be MCQ area. Valuation premise. For example, if we are planned for sports day, if you plan sports day for September 15th, are you preparing from now, or we will directly start all things in 15th? We will start from today. We will arranging the student, we will arrange the kits or cricket bats, volleyball, etc. We will start preparation now itself for the purpose of September 15th. Guys, okay? The same thing is said by valuation premise. If you are doing a valuation for 15th September, we can't do value at 15th. You need to do some pre-work. Without pre-work, we can't do the valuation set by valuation premise. At that pre-work, what are the things you have to consider? Fundamental basis, assumptions, fundamental basis, assumptions, principles, conditions, and concepts. If you collect all those information, then it's just a route map to valuation. So they will ask in valuation premise, what are the things we have to consider? First, we have to consider fundamental basis. That is nothing but why we are doing valuation. You have to decide first. That is called fundamental basis. Then if you want any assumptions, take that. So for example, if I am doing a valuation of steel manufacturing company, if I am using a discounted cash flow method, I am taking an assumption, this company following going concern principle. Why? I will consider noun period information as well as I can guess future. If I am take that going concern principle, that is a point, that is a valuation not consider the growth concept. It means we are feeling that the company will be closed soon. పాయింట్ అర్థమైందా? సో నువ్వు గోయింగ్ కన్సర్న్ అనే అసంప్షన్ తీసుకోకపోతే వాల్యుయేషన్ అనేది ప్రాపర్గా రాదు. ఇప్పుడు గోయింగ్ కన్సర్న్ అనే అసంప్షన్ తీసుకుంటే ఏం జరిగినట్టు, అక్కడ నువ్వు నీకు తెలిసిన పీరియడ్ ఇన్ఫర్మేషన్ తీసుకుంటావు, నీకు విత్ హెల్ప్ ఆఫ్ గ్రోత్ కాన్సెప్ట్ యాడ్ చేసుకొని ఫ్యూచర్ కూడా క్యాలిక్యులేట్ చేసుకుంటావు, ఇన్ఫినిటీ పీరియడ్ క్యాలిక్యులేట్ చేస్తావు. అది ట్రూ వాల్యుయేషన్. అదే నేను గోయింగ్ కన్సర్న్ ప్రిన్సిపల్ ఫాలో అవ్వకుండా లిక్విడేషన్ ప్రిన్సిపల్ ఫాలో అవుతాను అంటే మీనింగ్ ఏంటి, నాకు ఎక్కడ వరకు అయితే ఇన్ఫర్మేషన్ తెలుసో అక్కడ వరకు దాని తర్వాత కంపెనీ క్లోజ్ అయిపోద్ది. గైస్ క్లియర్? దట్ కైండ్ ఆఫ్ అసంప్షన్స్ యూ హ్యావ్ టు టేక్. నెక్స్ట్, when it come to principles, so we have 3 principles in accounts. That is the things we have to follow here also. Next, when it come to conditions, if any conditions imposed by government, you have to consider for the valuation. The next one is concepts. The concepts is nothing but methods. We have 7 to 8 methods for valuation. If you know all those things, then start the valuation. Yeah, you can observe fundamental basis or assumptions. Valuation is not a absolute without assumptions. Now when it comes to the assumption, going concern, accrual, consistency, discount rate is appropriate, stable economic industry environment, accounting information is reliable. ఇవన్నీ మీరు రాయాల్సిన అవసరం లేదు, చెప్పాల్సిన అవసరం లేదు, చేసేటప్పుడు ఉన్నాయనుకునేస్తాం. Next, principles of valuation. Principles of valuation. So this all are MCQs, sir. For 2 marks only, I am explaining all theory content for just 2 marks. Next, when it comes to principles of valuation, the first principle is substitution, anticipation, demand and supply, highest and best use, fair market value. So the word substitution represent buyer want to pay more than alternative. Buyer, he will pay or he will not pay? He will not pay. So why? Because if I purchasing a property means I can't focus on that particular property. I will check the surroundings, or I can check another property. I will compare both. That is called substitution. Next, anticipation. So the word anticipation represent present value and future values are both are not same. They're different. Either you have to take a decision from in future, or either you have to take a decision in present. When it is a requirement, present or future? Present only, na? That's why you have to bring that future values into present. Next, when it comes to demand and supply, I said at the time of a price point of view. Okay, you have to consider demand and supply of that commodity also, or asset also. Simple man. Value point of view also. If there is a huge demand, I am ready to pay more value. If there is a lot of substitutes, I am not ready to pay that much of value. Next, highest and best use. Highest and best use. The highest and best use represent assets point of view. So I am purchasing the asset. I am purchasing the asset not for putting inside. For the purpose of from that asset, I will gain more. That is the meaning for highest and best use. Next, fair market value, it's a definition. So if a transaction between arm's length price transaction, that value is known as a fair market value. Okay guys, that is all about theory. Shall we start with the calculation part? Okay. When it comes to the calculation part, you require these concepts. If you know these concepts, I will leave. The first one is cost of capital, capital structure, financial analysis, that is nothing but ratio analysis, and capital budgeting, that to NPV calculation. Okay, now I am start with the cost of capital. What is meant by cost of capital? If you follow step by step, you will get a clarity after completion of the chapter 6. You have any doubts, keep in your mind. Without my explanation, you can get the solution after completion of the chapter 6. Why? Because each and everything is interlinked. So student ki doubt ravochu, sir cost of capital enduku sir ikkada ante chapter 6 daaka akkada ardhamaitadi neeku. Okay, now when it the cost of capital, the meaning of cost of capital, anyone? It is a minimum required rate of return company must earn to meet expectation of an investor. Are you agree? I procured 10 CR from the public. in different sources. Everybody will give free of cost, or they will expect something. That expectation I need to meet with the help of my profit. Can I use that expectation is known as cost? Yes or no? Expectation for public is written. That expectation for my company, cost of capital. That's simple definition. Are you okay? Now I said I procure 10 CR with different sources. The different sources are, I have 5 sources. I can procure money from with the help of selling a security name called equity share, with the help of selling a security name called preference, with the help of selling a security called debenture, with the help of bonds, all covered under debenture list. All covered under debenture. Loans. Here are you selling any security? When it comes to the bank loan, we are not selling any security. We are just mortgaging my company documents. Guys, clear? In the first 3 cases, equity point of view, preference point of view, debentures point of view, I am selling the security with name and conditions. But when it comes to the bank point of view, I am not selling any security, just mortgaging my documents in the bank. Okay? Next, the 5th source name is called reserves and surpluses. If I am an existing company, if I have any previous year profits, I can use it for business purpose. That is the purpose of retention. For example, company has a 10 lakh profit for 2 members. They are not sharing entire 10 lakhs. They just shared 5 lakhs. Remaining 5 lakhs is there now. They keep it for future purpose. Now this is a future purpose. Now you can use that company profits for business expansion. Guys, okay? Now, this is an example. It is a minimum rate of return company need to earn to meet expectation of a investor. Investor represent equity shareholder, preference shareholder, debenture holder, banker. My question is, reserves and surplus whom fund? Reserves and surplus whom fund? Company fund. Company is nothing but owners. Owners fund. Equity share capital also owners fund. Reserves and surplus also owners fund. You have to maintain a clarity. Guys, okay? Now, see this example, you will get a clarity of this theory discussion. Company need 100 CR. Okay? Now, they are raising funds from the public, 20 CR, with the help of selling ownership. Sir, why you are procuring only 20 CR? Can you take entire 100 crore from the owner? No. Why? Dilution of ownership. If I fully rely on equity share capital, I need to lose my ownership. Appudu nu own avutao, nenu employee avutha. Guys, clear? That's why every company hold their 51% share, remaining percent only they can sold in the open market. Next. As a shareholder, equity shareholder now, because I procured fund from you, are you expecting free or are you expecting any money or free? Expecting. That expectation is known as equity dividend. So that denoted with KE. Now you have to calculate KE. Next. Another 20 CR I procured with the help of selling of document name called debentures. Debentures. At that debenture, you know the conditions as per law. Irrespective of your profits, I will pay. At the time of voting, you don't have any right. You can't involve in my company issues. Just at the end of the year, come to my office, I will give a suitcase, then go away. That's the conditions we are imposing. That's called debenture security, right? Okay. So, you are the debenture holder. Are you expecting something? That is called interest. Your point of view is a revenue, my point of view is a cost. It is denoted with KD. Cost of a debt. Another 20 CR I procured with the help of selling a security name called preference share. At that preference share, I imposed a condition. I am not imposing the condition called irrespective of profits, I will pay. Instead of that, I will impose a condition. If company have a profits, before sharing to equity shareholders, I will pay to you with help of preferredly. I will give a preference. Guys, okay? That is a condition. Second condition, if you continue with us for a few years, I will convert your preference share capital nature into equity share capital. Guys, okay? Now, this preference share capital is also being known as a hybrid security. So, దీంట్లో కొన్నేమో debt characteristics ఉంటాయి, కొన్నేమో preference characteristics ఉంటాయి. But even though it is a hybrid security, for the purpose of net assets calculation, even though it is an outside person, we are treating them as a owner of the company. Point to be noted. Generally, preference shareholder, owner or not a owner? Is not a owner. Is not a owner, but we are treating them as a owner. Guys, okay? Then another 20 CR, my company have a profits. Okay? Now, bank also there, na? Preference shareholder also expecting something that is called preference dividend. It is denoted with KP. When it come to another 20 CR I procured from the bank with the help of mortgaging my land building documents. They are expecting something that is called interest. It is denoted with KT. Next, another 20 CR I used from my balance sheet reserves on surpluses. That also be whom fund, sir? Owner's fund. Here, what are the right they have? KE only, no? Same right they have here also. Are you clear? Now they are expecting something that also be known as equity dividend, but it is denoted with KR. Cost of retained earnings, cost of equity. Are you clear now? Without late, I start with the calculation part of KD. So when it comes to the KD calculation, debentures are classified into two types: irredeemable, redeemable. When it comes to irredeemable, he will not receive his principal back. The person who invested the money, he will not receive his principal back. He will receive interest for perpetual life, lifelong. What company na mooseyale nu ona chachipala. Guys, okay? That kind of debenture is known as irredeemable debenture. When it comes to redeemable debenture, they will specify particular years in the document. For example, you can take 10 or 5 or 20. For example, 5. Now the meaning of the 5, for 5 years, I will pay interest, my side. For 5 years, I will pay interest to you. After 5th year ending, I will repay your capital. That is called redeemable debenture. Okay. Conceptually, you have to understand, when it comes to irredeemable point of view, I am paying only interest for lifelong. Can I use that is called capital expenditure? Capital expenditure. Wrong answer, it's a revenue expenditure. Interest is a revenue expenditure. Where you write the interest? Balance sheet or P&L account? Then what it is? Revenue expenditure. When it comes to redeemable, what kind of payments we are doing? For first 5 years interest, at the 5th year, repayment of the principal. Can I use what called capital? When it comes to here, you have to do accounting for revenue expenditure as well as capital expenditure. If you know this, you can easily answer the formula. Guys, okay? Now see. Irredeemable debenture means you know. Here I am accounting only revenue expenditure. KD equals to interest 1 minus tax divided by net proceeds or market price. Net proceeds or market price. Sir, why you are considering 1 minus tax? Simple logic they are using in cost of capital, sir. Just imagine the example. I taken a loan of 1 lakh from him. I paid 10,000 every month. How much percentage I paid as an interest? I taken 1 lakh from him. I am paying every month 10,000 as an interest. How much percentage I am paying? 10%. 10,000 divided by 1 lakh. Can I 10% is known as interest? That's the basic logic we are using here. Amount of interest divided by investment. For the investment, they are using a name called net proceeds or market price. Okay? In a numerator, as per example, just interest of 10,000. But what you say, 1 minus tax. Why? Because interest is a burden to the company. Interest is a burden to the company. At the time of agreement, I said, irrespective of profits, I will pay. Okay, loss వస్తే పే చేయాల్సిందేగా. ప్రాఫిట్స్ ఎక్కువ వస్తే వాడు ఏమైనా ఎక్కువ అడుగుతాడా? లాస్ వస్తే వాడికి సంబంధం లేదు, ప్రాఫిట్ ఎక్కువ వస్తే వాడికి సంబంధం లేదు. వాడికి ఎంత కావాలి, ఏదైతే రేట్ ఫిక్స్ చేసినామో అది ఇస్తే సరిపోద్ది. గైస్ క్లియర్? సో ట్యాక్స్ డిపార్ట్మెంట్ అర్థం చేసుకుని ఏం చెప్పిందంటే, ఇంట్రెస్ట్ అనేది నీ కంపెనీకి బర్డెన్ కాబట్టి దాని మీద ట్యాక్స్ బెనిఫిట్ తీసుకో. ఫర్ ఎగ్జాంపుల్ 30% is a company tax. Okay, how much percentage you said? 10%. Don't consider 10%, consider 1 minus tax. It means just pay how much? 7%. This is your KD. This is your KD. The concept of KD is in the concept of KD, pre-tax, post-tax is there. Keep in our mind this point. Always you have to use post-tax. Always you have to use post-tax unless they specifies. If the word they given 10% or 12%, it is a pre-tax. If they specifically mention 10% is a post-tax, then you can take directly. అలా వాడు మెన్షన్ చేయకుండా వాడు రేట్ ఆఫ్ ఇంట్రెస్ట్ చెప్పాడు అంటే అది ప్రీ ట్యాక్సే, వాడు నీకు మళ్ళీ చెప్పాల్సిన అవసరం లేదు, నువ్వు దాన్ని పోస్ట్ ట్యాక్స్గా కన్వర్ట్ చేసే తీసుకోవాలి. ఆర్ యు గైస్ క్లియర్? నౌ వెన్ ఇట్ కమ్ టు KD for redeemable debenture, here I need to account revenue expenses plus capital expenses. Revenue expenses, capital expenses. Now when it comes to the revenue expenses, interest 1 minus tax. Interest 1 minus tax. For the purpose of capital expenditure, repayment value minus net proceeds divided by n. Divided by n. So if you want to percentage, you have to divide it with investment. You have to divide it with investment. As per our knowledge, either net proceeds or market price is investment, na? But when coming to here, repayment value also there. Repayment value also there. Repayment value plus net proceeds or market price divided by 2. If it is a single value, I will consider single value. If I have two values, I need to consider average. This is the formula creation. Guys, clear? The green area is known as what, guys? Revenue expenditure. The blue area is known as capital expenditure. For the purpose of percentage calculation, I divided with the average investment. How to calculate average investment here? Repayment value plus market price or net proceeds divided by 2. I hope you understand the formula. That's it. So there is a problematic portion, I think. Open practical book. Yeah. See, if the rate at which the company can borrow funds from the financial institution is 11% and the tax rate applicable to the company is 30%, the post-tax cost of debenture would be, as per our knowledge, what is the formula? Interest KD equals to interest 1 minus tax divided by net proceeds or market price, right? Into 100 you will get a percentage. Now interest they specified 11% into 1 minus 0.3 divided by, where is the net proceeds or market price? Where is the net proceeds or market price? If you don't know about the net proceeds or market price, you are issued at face value. You are issued at face value. Now sir, face value also not there, na? There is a general assumption. Face value equal to 100. Face value equals to 100. Now 100, here also 100. Now you can directly answer 11 into 0.7. 7.7%. Any doubt on this? Sure. The next concept, cost of equity share capital, very, very important. Same is there in SFM also. Cost of equity. Before that, preference shares. I will explain in last K. Similar, sir, KP also. KP also be same as KD calculation. Irredeemable, redeemable. When it comes to irredeemable, KP equals to preference dividend divided by net proceeds or market price. When it comes to redeemable, KP is nothing but preference dividend plus repayment value minus net proceeds divided by N whole divided by average of Sir, don't consider both of net proceeds or market price. Consider what the information they given. Okay? Now what is the difference between KP and KD? Tax advantage. Tax advantage. Interest is a burden to the company. That's why government provided an advantage. Preference dividend is not an advantage. Why? Because if company have a profits, before settling to owners, we will preferably settle you. If company would have a profit, I am not responsible for the percentage I specified. Guys, okay? Done. Now, KT, cost of term loan. Interest 1 minus tax. That's it. Interest 1 minus tax. Sir, why you are not dividing with net proceeds or market price? Why you are not dividing with net proceeds or market price? There is a no security number. If I know the security number, I can figure out the market price per security or net proceeds per security. But here there is no security. My documents are mortgaging. That's why I am not dividing with the net proceeds or market price. Hope you understand. Next. Cost of equity, guys. The next one is cost of equity. Calculation of KE is difficult than KE and KD and KP. Are you agree for this statement? Why, sir? Calculation of KE is difficult than KP KD calculation. You said yes. You will agree. I am asking what is the reason? What? The simple man. When it comes to KD calculation, base is there. Interest percentage 9% debenture, 10% debenture, 12% debenture. Already they specified the basic. KP also same. That's why we can easily calculate. But when it comes to the equity share capital, are you observed anywhere in the balance sheet 12% equity share capital, 5% equity share capital? That's why we don't have a base. Because of no base, I can't figure out properly. Second thing, profits are certain or uncertain? I can't calculate KE properly. Growth aspect, are you providing to all stakeholders or particularly owners? Growth aspect. Growth aspect of company, andariki panchukuntava, only owners panchukuntara. That's why growth can be either increasing growth or decreasing growth. There is also fluctuations. Because of the issues, we can't calculate KE. Comparing to KP, KD easiness. అంతేగాని కేఈ చేయలేమని కాదు, కేఈ చేస్తాం, కష్టమైన చేయాల్సిందే. బట్ కంపేరింగ్ టు కేపీ కేడి దెర్ ఈస్ ఏ difficulties. For the difficulties, in FM they specified 4 methods: dividend based, earning based, CAPM, realized yield. Dividend based, earning based, CAPM, realized yield. Again, you already said growth aspect I need to share to owners. That's why I'm not consider the growth concept in KP calculation, KD calculation. But when it comes to KE calculation, you have to consider growth. Without growth, with growth. Without growth and with growth. Now when it comes to without growth, KE equals to D1 divided by P0. D1 divided by P0. So D1 represent return, P1 represent investment. Here all things I am using per unit point of view, not in total point of view. Next, with growth concept, KE equals to D1 divided by P0 plus growth. Plus growth. Another note point you have to understand here, D0 is not equals to D1. What is the meaning for D0 and what is the meaning for D1? D1 is a current year dividend, D1 is a expected. When I am calculating the value, I need to consider expected values always. Expected values always. This point will reflecting in each and every problem of the discounted cash flow method. If they will give current year profit and growth rate, don't consider current year profit. Consider future. How it get? With the help of adding the growth. Now see. D1 equals to D0 into 1 plus growth. D1 equals to D0 into 1 plus growth. Guys, clear? If you consider the growth of that 365 days, you will get a first year ending value. You have to use that first year ending value for the purpose of valuation. Keep this point in mind. In every problem, they will touch that point. Are you guys clear? Okay. Same, sir. Without growth, with growth. Instead of DPS, dividend per share, you have to use earning per share. E1 divided by P0. E1 divided by P0 plus growth. Same logic. E0 is different, E1 is different. When? If there is a growth concept. If there is no growth, current year dividend is nothing but next year dividend. Next year dividend is nothing but second year dividend. Guys, clear? Same for earnings also. So this one you already know. I think you learned in SFM. KE equals to RF plus beta into RM minus RF. The only point you have to understand here, RM minus RF is nothing but risk premium. They will give sometimes directly risk premium equals to 14%. The meaning of that 14% is RM minus RF value. Out of flow, if you consider it as an RM, your answer will be wrong. In few problems, if your KO is wrong, if your KE is wrong, automatically it reflected on KO. If your KO is wrong, your entire present value factors are wrong. If present value factors are wrong, your present values are wrong. Entire calculation is wrong, you will get 0 marks. After putting a 10 or 15 minutes of your valuable time. Very, very important ga chuskuntu poవాలి ప్రతి పాయింట్. అవుట్ ఆఫ్ ఫ్లోలో ఒక్కటి కేఈ మిస్టేక్ చేసేసామంటే 7 మార్క్స్ ప్రాబ్లం, 15 minutes టైం, రెండు వెళ్ళిపోతాయి. ఓకే, నెక్స్ట్. సో రియలైజ్డ్ yield, guys. So if I invest in shares, what kind of expectations you have? Only dividend. Capital appreciation. Instead of growth, you have to use the name called capital appreciation. If I invest 100 rupees on one security, I will expect two things. One is dividend per share for every year. Another one is capital appreciation. That means my 100 rupees need to get a more than 100. Guys, okay? That is called realized yield, man. Now, KE equals to dividend plus realized yield divided by investment is nothing but P0, na? Per share point of view. Current market price is nothing but your investment, P0. Or you can go with the market value. Now, when it comes to per unit point of view, instead of dividend, can I take D1 per share? How we get a capital appreciation? Capital appreciation. My share price is I purchased at 100 rupees. My present share price is 120. 20 rupees is the capital appreciation. The calculation is P1 minus P0 divided by how much I invested? 100 rupees P0. This is called realized yield. Any doubt on this? Sure? Okay. Apart from this, just to focus on this, why we are learning these things in final, you will get some clarity. With the help of this formula, can I figure out P0? With the help of this one, can I figure out P0? How, sir? P0 equals to D1 divided by KE. What is the meaning for P0, sir? Value per share. Value per share. Can I use a word called valuation? Go and observe the definition. So, valuation of security. We done a valuation of security in Inter itself, but we don't know about this. That's why you have to learn this. Guys, okay? So, you can use a word called value per share or market price per share or value of a security. Now, with the help of this, can I figure out P0 with growth concept? Based on this formula, can I figure out P0? Yes, you shuffle the formula, you will get a P0. Now shuffle. First send this G into this side. Plus G get as a minus G. D1 divided by P0. Send this P0 to this side, Ke minus G into this side. Now P0 equals to D1 divided by valuation we done intra itself, but we don't know it is a valuation. Guys, okay? Now if you multiply with the number of shares, you will get a value of an organization or value of a equity. Hope you understand. Same for this KE of earnings point of view also. So I think already we recorded, sir. In our material is there. Okay, done. See, this is the stuff. Okay, next, beta, guys, beta. Why? Because we are under CAPM. When it comes to beta, covariance of market security divided by variance of market and security. The only basic formula they provided for calculation of beta, you can understand for the purpose of MCQ. One problem is there. Next, when it comes to standard deviation, for the purpose of risk calculation, square root of variance. How to calculate variance? X minus x bar whole square. If they give probability, consider probability into x minus x bar whole square. If they provide more than 1 year, you have to consider summation. Hope you guys clear? Next. Put a star for this one, sir. This is the final standard. I think it's covered in your SFM. CAPM, for a public companies, we are using basic version. That is nothing but RF plus beta into RM minus RF. When it comes to private companies or small capital companies or startups, we are using expanded CAPM. Expanded CAPM or build up CAPM. Build up CAPM. Unnaya SFM lo ivi? Build up CAPM. Just for example, there is not a name, it is just name given in the SPM BV. Okay, this model is there. If there is a no beta, you have to figure out KE with the help of risk factors. That is a concept I am called build up CAPM. Concept is there, name is not there in SFM. Guys, okay? Now observe, the basic CAPM assumes that all investors face only market risk and they are fully diversified. But when coming to the reality, not only market risk, external risk also impact my company shareholder. That's why their expectation will be increased. Only because of market risk, we will expect something. But in the reality, not only market risk, some external risk also impacting my company values. Because of that expectation, I am facing the risk as a one, my expectation will be increased. Simple. ఇండియాలో ఒక కంపెనీ ఉందయా, ఆ కంపెనీ యొక్క మార్కెట్ రిస్క్ ఈ ప్రజెంట్ ఇండియన్ ఎకానమీ పాయింట్ ఆఫ్ వ్యూ రిస్క్ ఉంది. ఆ రిస్క్ కోసం ఓనర్స్ ఏం చేస్తున్నారంటే 10% ఎక్స్పెక్ట్ చేస్తున్నారు. ఏవైతే మన ఎక్స్పెక్టేషన్స్ ఉన్నాయో అవన్నీ మన రిస్క్ని మిటిగేట్ చేసుకోవడం కోసం తీసుకునే డబ్బులే. ఎందుకు బ్యాంక్లో డబ్బులు పెట్టి ఇంట్రెస్ట్ తీసుకుంటామంటే ఫర్ ద పర్పస్ ఆఫ్ రిస్క్. ఆడెవడో నాకు తెలియదు, యాజ్ పర్ గవర్నమెంట్ రూల్స్ అండ్ రెగ్యులేషన్ ఉన్నాడు కాబట్టి డబ్బులు పెట్టా, పోతాయేమో అనే భయంతో ఇంట్రెస్ట్ తీసుకుంటున్నాం. గైస్ క్లియరా? ఇప్పుడు there is a pandemic situation in USA that impacts your company. There is a pandemic issue in the USA. That issue will impact your company? Yes or no? Can I use the called risk? Internal risk or external risk? Now I need to bear that also, na? That's why my expectation need to be increased. At that time, where I am using a concept name called expanded CAPM. Why? Because of a globalization, every country is interlinked to trade point of view. Because of US, my trade will impact. Because of my country economy, my company will impact. Because of my company, my shareholders will be impact. Because of risk. So we use the expanded CAPM to make the KE more realistic by adding relevant risk premiums. Let us check here. At the time of expanded CAPM, you have to consider all those things. RF plus beta into RM minus RF for market risk. Apart from the market risk, we have another risk called CRP is nothing but country risk premium, next size premium and liquidity premium. So these are the risks I am facing. Because of market risk, I just want basic KE. Because of different risk, I need more. That's why I'm adding all premiums. Are you guys clear? నువ్వు ఏవైతే యాడ్ చేస్తున్నావో అది నీ ఎక్స్పెక్టేషన్ పెంచుతాయి. అంటే నువ్వు ఎక్కువ కంపెనీ నుంచి తీసుకోవాలనుకుంటున్నావు. ఎందుకు ఎక్కువ తీసుకోవాలనుకుంటున్నావు? బికాస్ ఆఫ్ కంట్రీ రిస్క్, బికాస్ ఆఫ్ సైజ్ రిస్క్, బికాస్ ఆఫ్ లిక్విడిటీ రిస్క్. దిస్ ఆర్ ద రిస్క్ వీ హ్యావ్ అపార్ట్ ఫ్రమ్ ది మార్కెట్. ఇఫ్ యువర్ కంపెనీ ఫేసింగ్ ఓన్లీ మార్కెట్ రిస్క్, no need of this discussion. Just RF plus beta into RM minus RF. That is a concept name called RM. Market rate of return. Minus risk-free return. You are multiplying with the beta. You will get a risk proportion value. Yeah, no doubt. Hand raises. No way. Done, na? So if you have a other than market risk, you have to consider as a considerations. Because of considerations, I am adding. Next, build up model. If you don't know beta, how much risk implication sensitivity is there, you don't know. At that time, you have to figure out KE. We are using a model name called build up CAPM. Now, the build up method is a variant of CAPM used to estimate KE, especially when beta is unavailable or unreliable. Now, how to calculate this, sir? Sum of all risk in a market and industry. Not only your company point of view, you have to consider total. All premiums is known as KE. Now see, RF plus equity risk premium plus size premium plus industry risk premium plus specific risk premium plus country risk premium. Calculation point of easy only. Okay, understanding point of only difficult. Now, beta adjusted risk is a basic CAPM. No adjusted is a build up model. That is nothing but there is a no beta. Anyone? Doubt? Sure? Now come to the practical problems. Problem number 2. If 10-year government bond yield, 4 times asked, sir, that question for MCQ 2 marks. 4 times, not only 1 time, 4 times. Values will change. Now, if the 10 years government bond yield 7.5%, can I take it as an RF? Okay. Next. Do the calculation. If 10-year government bond yield RF 7.5%, BSE Sensex return over the last 1 year is 15%. Can I take RM? Market rate of return 15%. Assuming the company beta is 1.2 times, what is the required return on equity? Sir, I am not explaining about the detailing of the beta, RM, all those things. Just explain things what we required. Now please calculate, tell me the KE as per CAPM. Which CAPM is suitable? Which CAPM? Basic CAPM is suitable. RF plus beta into RM minus RF. Tell me the answer. 16.5%. Next. The standard deviation of the return on the market index is estimated as 25%. If the covariance of company A's return with the return on the market index is 0.05, what is the beta of a company? What is the formula for beta? Covariance of market security divided by what's the standard deviation of variance of security and market. Not standard deviation, it is divided with variance. The variance is nothing but root of standard deviation, square of standard deviation. Don't confuse. Standard deviation equal to square root of variance. Variance equal to square of. Guys, clear? Done. Now what they given, guys? This is the standard deviation. I want variance. How? 25% square? 25% square. Now they already given numerator, covariance of security and market. Now 0.05 divided by 0.25 square. 0.8 times is your beta. Now come to illustration number 4. Illustration number 4. So this is the concept name called KO calculation. KO calculation. So the word KO represent overall cost of capital or weighted average cost of capital. Overall cost of capital or weighted average cost of capital. Now the point is KO equals to weight of equity into cost of equity plus weight of debt into cost of debt plus weight of preference into cost of preference plus weight of retained earnings into cost of retained earnings plus weight of term loan into cost of term loan. This is the way to calculate KO. Sir, why you are considering weights, sir? Add all. Instead of considering the weights, consider all KP plus KD plus KD plus KT plus KR. Why you are not doing like that? Why you are doing with consideration of weights means the thing I will explain. For example, KO equals to KE equals to 10%, KP equals to 12%, KD equals to 14%, KT equals to 13%, KR equals to 10%. Add all. Add all. 49, huh? What's the meaning for 49? Sorry, 59, huh? So what is the meaning for 59? At the end of the year, for procurement of 100 crore, I need to pay 59% of expectation, not capital repayment. And the top business anidi. Only interest 59% kartao. Possible la? That's why we are considering weights. Guys, clear? If you considering weights, it will be 59% is converted into 13%, for example. Now, which one is practically possible? 13%. It means out of 100 here, for every year I need to pay 13 crores as an expectation. Guys, okay? Now another point, how to calculate weights? How to calculate weights? How to calculate weights? First, before calculating weights, you have to consider all capitals total. That is called capital employed. Amount of specific capital divided by capital employed is called weight. Is called weight. So come to the problem number 4. Come to the problem number 4. Suppose Alpha Limited as a capital structure composed of the following. Debt how much? 30 million. Huh? Equity 45 million. If the before tax, any other capitals? Any other capitals? Company, how much is the requirement? 30 plus 45, 75 million. Huh? Out of that 75 million, what sources they are procured? From debt 30 million, from equity 45 million. Now see, capital employed equals to debt plus equity. That is nothing but 30 plus 45, 75 million. Huh? Now when it comes to weight of equity, equity capital divided by capital employed. What's the equity capital? 45 divided by 75. What's sir? 0.6. Weight of debt, sir? Debt divided by capital employed. 30 divided by 75, 0.4. It means if I procure 1 rupee from the market, on that 1 rupee, 0.6 paisa is a equity portion, 0.4 paisa is a debt portion. That is called weight. Now, KO equals to cost of equity. Yeah? I already expressed how to calculate cost of equity. But in this problem, they are given directly, I think. K equal to 16.5%. Can I take directly? 0.165. Into weight of equity, I already calculated. How much? 0.6 plus cost of data. We have to calculate a given. We have to calculate. Why? Because they specially mentioned it is a pre-tax. Even though there is a word called, there is a no word of pre-tax, you have to consider it as a pre-tax only. Guys, okay? Unless they specified. The rate represent pre-tax only. Now there is a tax rate 30%. Now can I take 0.7077? 7.7% only. Now next into weight of debt, sir? 0.4. Now tell me the answer. 0.165 into 0.6 M plus 0.077 into 0.4 M plus MRC. 0.1298. This is called rate. If you multiply 100, you will get a percentage. 12.98%. Next, when it comes to problem number 5. When it comes to the problem number 5. So, problem number 5 newly given in the ICMA workbook. Up to now we discussed the problems all covered under material. From here onwards, it's a workbook problems. Okay, that expanded CAPM and build-up CAPM is there now. They are all covered in workbook only. In workbook itself, they provided 32 new models for entire BV. Now read question number 5. An analyst examining the private firm under consideration as an acquisition and determines the following. The current capital structure is non-optimal because the owner avoids the use of debt. So, just forget about the word called non-optimal. I will give a clarity at the time of capital structure explanation. It purely depends upon the optimum mix. Okay. A small stock premium and company specific risk premium are determined because a private firm is such smaller and much less diversified than public firm that beta is estimated from. What is the estimated CAPM? Expanded CAPM. Suitable for which kind of companies? Small cap, private companies, startups. That is the explanation they given. Even explanation also they provided. Next, The industry risk premium reflects the additional risk in the industry compared to the broad market. The relevant figures are listed below. Risk-free rate, RF, equity risk premium, RM minus RF, beta. Can I consider these three things? I can find out basic CAPM. Basic CAPM is not sufficient for private companies. You have to consider external risk point of view also. Small stock premium, company specific risk premium, industry risk premium. So first you have to calculate here basic KE for CAP as per CAPM. ఆ మూడు కన్సిడర్ చేసి నాన్న. The KE for basic version is total answer కాదు, only for this 11.4%. Next I need to consider this 3%, 2%, 1%. What sir? 17 point. What's the problem number 5 only, na? Yeah, you can observe here. So basic version is 11.4%. Next, when it comes to expanded CAPM, basic KE, country specific risk, size specific risk, liquidity risk. Don't consider industry risk. Don't consider industry risk. Go and check concept also. Industry risk is not there. Only 3 is there. Country specific, size specific, liquidity specific. Hope you guys clear? If you consider that one person, your answer is wrong. Are you okay? Now 11.4 plus what about the country specific? Plus 0.0 plus 2% plus size risk premium size 3% plus liquidity not there, 0. Don't consider industry risk as a liquidity risk. Hope you guys clear? Now what is the appropriate KE? 16.4%. Here calculation of KE is not a question. KO is the question. But if you want to calculate KO, you want KE. Guys, okay? Now KE I already calculated based on the knowledge. Now pre-tax cost of debt is given 9%. What is required? Pre-tax or post-tax? Now into 1 minus tax. What is the tax rate? 30%. Can I take directly 70% here? 1 minus tax is nothing but 70% only, na? How much? 6.3%. Debt divided by total capital for public firm in the industry is 30%. Optimal debt divided by total capital 12%. Current debt divided by total capital is 3%. Can anyone tell me the meaning of this? KD is completed, KE is completed. What are the pending for KO? Weights. Weights only the pending. Now the entire information only for the purpose of weights calculation. Sir, optimal debt divided by total capital. It means the amount of debt divided by capital, that equal to 12%. Means 0.12 is the weight of debt. Out of 100, if you remove 0.1, what is the pending? Out of 1 rupee? 0. That is called weight of equity. Current debt divided by total capital, 3% is given. But I want this current debt and optimal debt confusion is there. Now I want only weight of equity, weight of debt. But they specifying 3 things. Edi consider cheyali. Edi consider cheyali. This debt divided by total capital will also give a proportion. 0.3 is the weight of debt, 0.7 is the weight of equity. The optimal debt divided by total capital gives 0.12 is the weight of debt, pending is the weight of equity. This current debt divided by total capital also give 0.03 is the weight of debt, pending is the weight of equity. Now what I need to consider? కన్ఫ్యూజ్ చేసే పాయింట్ అర్థమవుతుందా మీకు? కే దగ్గర క్లారిటీ, ఒక పాయింట్ ఉంది, యూ డోంట్ నీడ్ టు కన్సిడర్ ఇండస్ట్రీ ప్రీమియం. KD is not a complication. The only complication in this, now consider and tell me. What, sir? This one or this one or this one? Which option we have to consider? Current. Any resemblance? Any there is a ఏమైనా క్లారిటీ ఉందా ఎందుకు దాన్నే తీసుకుంటున్నామని? No? Okay. Open your practical book, you will get a clarity. Notes. Go and observe the second point of the question. They are using a word called non-optimal. They are using a word called what, sir? Non-optimal. As per current, what is the ratios they given? As per current, debt divided by total capital, 3%. Non-optimal means we are not focusing on optimal only, na? Now, without optimal, what is the consequences we have? Current debt divided by total capital. It means weight of equity equals to, before they said weight of debt, out of 1, 0.03 is the, direct said 0.03 is the weight of debt. Now, what about the weight of equity? 1 minus 0.03, that is nothing but 0.97. Are you clear? Now, the calculation of weighted average cost of capital under current and optimal capital structure, they calculated both. They calculated both. Before that, here one thing we figure out or not, we are missed here. Just for understanding sake, I recorded. Just for understanding sake. Beta is given, that's why I used a expanded CAPM. If beta is not given, I need to use a build-up model. If it's a build-up model, the KE is 15.6%. Okay. You see, calculate the required return on equity using the CAPM, the expanded CAPM and build-up method. You can calculate all those three. If question is silent, ఇప్పుడు వరకు మనం ఏం డిస్కస్ చేసుకున్నామో అలా చేసుకుంటూ వెళ్దాం. ఇఫ్ క్వశ్చన్ ఈజ్ స్పెసిఫైడ్, వీఆర్ యూజింగ్ దట్ లాజిక్స్. గైస్ ఓకే? ఇప్పటివరకు మనం ఏమనుకున్నాం, క్వశ్చన్లో క్లారిటీ లేదు కాబట్టి డెట్ డివైడెడ్ బై టోటల్ వాడాలా, ఆప్టిమమ్ డివైడెడ్ బై టోటల్ వాడాలా, కరెంట్ డివైడ్ బై టోటల్ వాడాలా అని చెప్పా. సో ద క్లూ దే గివెన్ ఇన్ ద క్వశ్చన్ నాన్ ఆప్టిమల్. దట్స్ వై ఐ కన్సిడర్ కరెంట్ డివైడెడ్ బై టోటల్ క్యాపిటల్. బట్ స్పెసిఫికేషన్ గివెన్ ఇన్ ద క్వశ్చన్, అంత రిస్క్ నేను తీసుకోను. As per specification, I will calculate. Now, CAPM we calculated basic, and as well as expanded CAPM also we calculated. So calculate as per build up also. Build up. Remove beta, add all. Including industry, yeah? Including industry. Now, if you add all, you will get an answer, I think, 15.6%. Guys, okay? When it comes to build-up model, RF plus beta into RM minus RF is not there. Guys, okay? You have to remove this. You need to consider RF, ERP, SRP, CSRP, IRP. Why? Because without beta, there is no use of RM minus RF. Common sense only, na? Okay. What is the next question they are expecting from us? Calculate weighted average cost of capital using the current capital structure and optimal capital structure, assuming cost of equity 16%. Now, easily. KO equals to KE into weight of equity plus KD into weight of debt. Generally, we have a 3 KEs as per basic CAPM, as per expanded CAPM, as per build-up. Have you done that? Consider the 16% specified in the question. Now 0.16 as per current. What about the weight? 0.97 plus KD we already calculated here. 0.063 into, what about the weight of debt here? 0.03. Now please tell me the answer. What ma? 15.70. As per optimal, KE into weight of equity plus KD into weight of debt. K is specified 0.16. What about the weight of equity? Will change 1 minus 0.12. 0.88 plus KD 0.063 into debt, weight of debt 0.12. 12 means more than 10. Now tell me the answer. Put a 5 star. There is a chance for this question, this attempt, 5 star rated question. Comment on the appropriate capital structure weights. Comment on the appropriate capital structure weights. The current capital structure reflects the current owner's conservative use of debt. The optimal capital structure can be determined through discussion with the financiers. The optimal capital structure should be used to calculate a lower weighted average cost of capital. Compare both the KOs. Which one is the lower one? What is the answer for this? Optimal. 0 point? Can I take 14.83%? 14.83%. I will say decision. If you observe the weight of the optimal of debt, how much? 12%. 12%. Because of incremental of the debt, owner expectation will be increased. Guys, clear? But the point you have to understand, due to debt, due to tax advantage, my benefit is decreases. My cost is decreases. Because of debt risk, ఓనర్ ఎక్స్పెక్టేషన్ ఈజ్ ఇంక్రీజెస్. నువ్వు డెట్ చేస్తావు అంటే ఓనర్ ఉండడు కదా. ఓనర్ ఉండాలంటే ఏం చేయాలి? రిస్క్ వస్తుంది కాబట్టి నాకు ప్రాఫిట్స్ ఎక్కువ ఇవ్వు ఉంటానంటాడు. అప్పుడు నువ్వు డెట్ వల్ల ఏదైతే బెనిఫిట్ వస్తుందో దాన్ని మళ్ళీ తీసుకెళ్ళి ఎవరు కాంపన్సేట్ చేయాలి? ఓనర్ కాంపన్సేట్ చేసేయాలి. గైస్, ఓకే, దిస్ ఇస్ ద డెసిషన్ రిగార్డింగ్ టు పాయింట్ సి. వెరీ వెరీ ఇంపార్టెంట్ పాయింట్. నెక్స్ట్, వెన్ ఇట్ కమ్ టు ప్రాబ్లం నెంబర్ 6. ప్రాబ్లం నెంబర్ 6. Break, huh? Okay. So we will continue after break. So live will continue, huh? What about the DT? After break also live come. So, okay, so we completed illustration number 5, right? Next. When it come to illustration number 6, sir, question bank, huh? Go and ask. They will give. They will give a set of books, 3 books. Yeah, available. So come to illustration number 6. So Mahavir Limited has the following capital structure based on market values. Equity capital is given 80,000 shares of rupees 10 face value. Now what about the capital amount? 80,000 into 10 rupees, no? Now 80,000 into 10 rupees is how much? 3 sets. Concept to work. So equity capital 80,000 shares of rupees 10 face value. Now what is the book value of equity share capital? Face value into number of shares. Now how much is the value? 8 lakhs. But you can observe column what amount they given? 1 crore. Can I take 100 lakhs? Now what is the difference between 8 lakhs and 80 lakhs or 8 lakhs? This one? 8 lakhs and 100 lakhs is the difference? Market value. Guys, okay? So when it comes to KO calculation, sometimes they will give book values, sometimes they will give market value. In intermediate, you already know KO as per book value or KO as per market value. Guys, clear? Now, this is a problem, that kind of problem, market values and book values is given. If they specify, we will calculate based on market value or book value. If they not specify, we will answer for both. Okay. Now 15% preference share capital, 6,000 shares, 100 rupees each. What's the book value? 6 lakhs. But how much they recorded in the amount column? Now what is the difference? So the 21,000 is not about the difference. I'm talking about the amount point of view. I'm not talking about the value point of view. Why 6 lakh 12,000? Why 6 lakhs? 6 lakhs is a book value, 6 lakh 12,000 is a market value. Next, 14% debenture, face value is 1,000. Face value is 1,000, but they not mentioned number of debentures. But they not mentioned number of debentures. Number of debentures is required here. Number of debentures is required. Why I will explain later. Okay. Now when it come to 16% term loan is there. 16% term loan they not provided face value. Can I consider book value is nothing but market value? I said a logic. If there is a known number of securities for a term loan as well as reserves and surpluses, that's why we are not conclude with the market values. Book value is nothing but market value. Now, the dividend per share expected for the next year, the word expected represent D1. If they given expected or estimated or next year, these are the clues for D1. You need not to convert D not into D1. You directly take D1 equals to 3.5. Okay. Expected grow at the rate of 12%. Now it is the clue for KE calculation. When it comes to, it's a dividend with growth model. D1 divided by P0 plus growth. Now, okay. Now, preference shares are redeemable after 5 years at a premium of 5% and up to, here is a point up to preference share capital. Here to here. And debentures are redeemable after 10 years at face value. Here is about debentures. Now up to here is about equity point of view. Now the application of tax rate company is 40%. If they given tax rate, you have to focus on KD. Pre-tax, post-tax. Okay. You are required to calculate weighted average cost of capital using market values. Yes, they specially mentioned, I want market values. Okay. KO equals to, in About two problems, debt and equity only capitals we have. But when come to this question, four capitals we have. K into weight of equity plus KD into weight of debt plus KP into weight of preference plus KR into weight of, sorry, not R man, T, small t, term loan. Na? We can easily answer weights. How? Sum of these given market values is known as capital employed. Now I have a question for you guys. Tell me, what is the market value of 16% term loan? What is the market value of 16% term loan? Because of no securities, there is a no number of securities, book value is nothing but market value. Same logic is used for reserves and surpluses also. Are you guys clear? When it comes to, you can go and observe equity share capital. Number of shares is there, book value per share is there 10 rupees. I can calculate book value. But they recorded 100 lakhs, that is nothing but market value. How it possible means number of shares into market price. Number of shares into market price. Can I find out market prices here? 100 lakh divided by 80,000. 100 lakh divided by 80,000. Tell me the answer. 100 lakh divided by 80,000. Equity, market value of equity equals to number of shares into MPS. I want MPS now. Shuffle the formula. Market value of equity divided by number of shares. So 100 lakh divided by 80,000. 125. This is a market price per share. Can I find out market price of preference share capital? Yes, market value is 6,21,000 divided by number of preference shares. Right. What is 6,000? So 6,21,000 divided by 6,000 shares. What is the market price per preference share? 103.5. Can I find out 14% debenture market value? They provided only face value. They not provided number of debentures. If I have a number of debentures, I can calculate book value per share. They given market price is nothing but market value for debt divided by number of debentures. Guys, clear? Now market price is mandatorily required here. Mandatorily required. Why? Because what is the formula for KD? Divided with, if it is a redeemable, redemption value plus market price divided by 2. If it is a irredeemable, interest 1 minus tax divided by market price. Why? Because they are asking market values. Now how I decide market price? If you have a exam experience, no, you already completed cmainter na. So when it comes to cmainter, the question paper heading itself saying that if you required necessary assumptions, you need to consider, you need to take. It means here you have to take a number of debenture as an assumption. Guys, clear? Sir, can I take 10 debentures? Assumption, man. It is an assumption. I am assuming 1 debenture is there. No issue. Sir, can I assume 100 debenture? Yes. Can I assume 1000 debenture? Yes. But what are the assumption you can take? It is relevant to the calculation. That's why I am not taking a 110. I am taking 1000. Take assumption 1000 debenture. Now tell me the market price. Market price. What, sir? Market value will not change. They already fixed 9,70,000. 970, yeah? 970. Why? Because they are issued at a discount. Their face value is 1000. They are issued at 970. It means 250 is known as discount. Guys, clear? If you take 100, it will show I think 9,700. Guys, clear? That's why I'm taking a relevant assumption. Number of debentures equals to 1000. Hope you guys clear? Now what about the market price per 16% term loan? Market price. There is a no market price. There is a no number of securities. That's the formula. KT equal to interest 1 minus tax. That's it. 16% is there into 40% tax. Into 60 you will get a post-tax KT. That's it. Are you clear now? Done. Now please tell me the capital employed, total capital employed as per market value. 100 lakh plus 6.21 lakh plus 9.7 lakh plus 8 lakhs. 120? 3.91 lakhs. Huh? Hey, just go with the point values, man. 100 plus 6.21 plus 9.7 plus 8. 123.91. Can I find out the weights, guys? Weight of equity equal to 100 lakh divided by 123.91. Na? Now answer please. What ma? Sir, don't multiply 100. I am considering the rates. If it is a rate, don't multiply 100. You will get direct rate answer. Now tell me the rate answer. 0.08. 0.08. 100 divided by 123. Calculator vadantra. 0.807. Now weight of debt equals to, what is the amount of debt? Go with the order. Preference is given. What is the amount of preference? 6,21,000. 6.21 lakh divided by 123.91 lakhs. 0.05 exactly. Yeah? Weight of debt, please. Market value of debt divided by capital employed. Sir, I have a doubt, sir. Why you are considering only market value, sir? They specified. I want KO as per market values. Instead of book values, I am considering market values as a numerator. Now, weight of debt, please. What is the amount of debenture? 9,70,000. 123.91 lakhs. 78. Weight of term loan, please. Book value is nothing but market value. 8 lakhs divided by 123.91 lakhs. 6. Now, if you sum all, you will get 1 is the ultimate answer. Guys, okay? Now, the meaning, if I procure 1 rupee from the market, out of that 1 rupee, 80% occupies equity share capital, 5% occupies preference, 7.8% occupies debt, 6.4% occupies term loan. That is the meaning of that summation of 1. Are you clear now? Now, weights is there. Now I have to figure out KE. How to calculate KE, guys? How to calculate KE? So here they provided dividend with growth model. As per dividend with growth model, KE equals to D1 divided by P0 plus growth. Now D1 please. 3.5 given in the question paper. P0 we calculated 125. Growth rate given in the question paper. How much percentage? 12%. Open the practical material. Page number 73. Practical book says there. Yeah, that's one. So inside there is specified, sir. Side lo untadu chudra paina paper meeda. Yeah. 12%. 0.12. Now please tell me the answer. 0.148. That is nothing but 14.8%. The next one I need to figure out KP. When we are calculating KP, we have to consider which model it is. Redeemable, irredeemable. Go and check the question. Preference shares are redeemable after 5 years. Now directly write down the formula. Preference dividend plus repayment value minus market price. There is a no net proceeds information. Divided by number of years, whole divided by repayment value plus market price divided by 2. Now preference dividend equal to face value into percentage. What is the face value? 100. What is the percentage they given? 16%. 15. Now what about the dividend per share? 15. Preference dividend per share 15. Plus repayment at any specification? Redeemable after 5 years at a premium of 5%. Face value 100. I pay more than 100, that is nothing but 5%, 105. What about the market price? What about the market price? 103.5. Divided by number of years 5, whole divided by 105 plus 103.5 divided by 2. Zero point 146 8 68. Can I take 14.68%? KP also ready. KD same logic. Redeemable, irredeemable. Go and check the question. And debentures are redeemable after 10 years at they repay 1000. They repay at 1000. Interest percentage and face value 140 or 140. 1 minus 0.4. Why? Because interest 1 minus tax, na? Plus repayment value, face value. If question is silent, at the time also you have to consider face value only. 1000. Minus net proceeds or market price. Market price is there, 970. Divided by 10 years, whole divided by average. Tell me the answer. What much? 0.088. Okay. Another one is pending KT, guys. Direct interest 1 minus tax. Now what about the interest rate they given? 14% or 16%? 0.16 into 0.6, 1 minus tax. Now answer? 96 or 9.6%. Any doubt on this? A point values ki percentage ki you confuse avutunnaru ledhu kada. They're just a rate and percentage. If you're considering the amount rupees point of view, you will get an answer called rate. If you multiply 100, you will get a percentage. Okay now? Done? All values are completed. Take your calculator. 0.807 plus 0.148 m plus 0.050 plus, sorry, not plus, into, sir. There is a K. 0.1468 m plus, first plus kotara, m plus kotara, plus kotara. Go with the direct calculation, m plus point of view. Now consider, wait, 0.807 into 0.148 m plus 0.050 into 0.1468 m plus 0.078 into 0.088 m plus 0.064 into 0.096 m plus MRC. Tell me the answer. 0.14. సాంగ్కి ఊపు రావాలి కానీ ఎందుకురా మీరు అక్కడికి వెళ్ళిపోతుందా మైండ్ అంతా. సరే ఒక 2 minutes ఉండండి, నేను సార్తో మాట్లాడి క్లాస్ క్యాన్సిల్ చేసి రేపు గంట కంటిన్యూ చేద్దాం. అవట్లా నా వాళ్ళు కూడా అవట్లా కన్సిడర్ చేయలేకపోతున్నాం. అవునా? Tell me this answer, we will conclude here. So the exact answer, as per calculation, you will get a 0.14004. They are approximately taken 0.14. That is nothing but 14%. Guys, clear? So this is just a intermediate problem. So you need to think in a final level only one assumption. There is a not given number of debenture. You have to take an assumption, but that assumption also relevant. Are you guys clear? So now student had a doubt, sir, always market value is higher na, why you are considering less? If you take 1,000 debenture, the value is 970. That's why I am considering more. If you take more, that time also you will get a similar answer only. If you take 10,000 debenture, what happened? What happened? 97. Now face value, market value is not matching. At that time, you need to use your common sense. They are issued at a discount. Are you guys clear? Okay. This is about today, guys. We will continue tomorrow because of Vinayaka Chaturthi. They set a DJ here. I am not concentrating. As well as full sounds is there. We will continue tomorrow class. ఒక హాఫ్ అన్ అవర్ వెయిట్ చేద్దాం లేదంటే. చెట్లు కూడా కట్ చేస్తున్నారు అనుకుంటా కదా, అది వేరేనా? అవ్వట్లే అసలు, సౌండ్ చూడు అసలు. ఇంకెంత సోపు ఉంది అది వెళ్ళడానికి? అవుతుంది చూడవా, పట్టిద్దా? 7 వరకు ఉంటుందా? ఓకే గైస్, వీ విల్ కంటిన్యూ ఫ్రమ్ టుమారో.
చేసినప్పుడు టెక్నికల్